Ladies and gentlemen, we will continue with the highlighter session industry on the topic of margin call, investors' view on Indonesia Fintech. And this session will be moderated by the President of Jakarta Foreign Correspondents Club JFCC and Southeast Asian News Editor Reuters, Mr. Edward Davis. Please join me in giving a warm welcome to Mr. Edward Davis.
Thank you very much for that warm welcome. In my 2 stints in Indonesia, I've seen interest in fintech and the digital economy explode, with huge demand from our readers for coverage of startups and investment in tech in general. And the pandemic has surely accelerated many of these trends. Of course, there are risks from greater financial inclusion without the right balance of regulation and digital literacy. But I'd like to welcome our panelists today for this session, who are all leading lights in the investor scene. Peter Kemp is principal of Sequoia Capital, based in Singapore, and one of the first members of its Southeast Asia investment team. He advises on early stage investments in consumer internet and fintech, and serves on the board of more than 10 companies. He previously ran his own startup and worked at an incubator and held various roles at Cisco and Amazon, targeting ecosystems across Asia. The second person on the panel is William Ghazali, who is Vice Chairman of the Indonesia Venture Capital Association and CEO of BRI Ventures, a $250 million fund backed by Bank BRI, investing in Southeast Asia's best companies. He previously led the investment division of Indonesia's biggest telco, CVC, where he invested in startups globally. As he notes, working together with Indonesia's largest telco and largest bank has given him deep knowledge and understanding of how to crack the Indonesian market. And our third member of the panel is Andy Devisi, who leads the IFC's FinTech Investment Group. An entrepreneur at heart, he loves helping management build companies as an equity investor. He started investing in his native Albania in financial services, real estate, retail, and manufacturing. While with IFC, he has been investing around the world in over 20 countries, and for the past 10 years, he and his team have focused exclusively on fintech, helping IFC build the largest such dedicated portfolio in emerging markets. So I'd like to open up to the panel. I mean, as investors, I'd like to start the discussion perhaps to get a sense of how each of you see the current digital economy landscape in Indonesia, and also how you see the fintech growth in Indonesia, and if possible, how does that compare to what's going on in other countries in Southeast Asia? Perhaps I could start with William as the local person here. Thank you.
Hi. Thank you, Edward and the fellow panelists. So I think, yeah, this is an interesting time if talking about the current digital landscape of Indonesia, because we're pretty bullish as an investors, because if we recall, like the tech startup movement in Indonesia, all the unicorns were born in around 2009, 2010. So it's barely 10 years. So we are still in growth phases. The early days, like all the unicorns and the Android mobile adoptions, it starts like around a decade ago. So the subset and continuations of digital economy are still growing. I would say like pioneered by the Iron Triangle. I would say the Iron Triangle consists of the e-commerce, fintech, and logistics. Those are the sectors that really drive our digital economy forward. And after 10 years, we're seeing that we're entering the subset of this industry. The subsectors are growing. So we're pretty much on the second wave, on the second decade, and we're still in a growth phase, and the opportunity is still tremendous.
Okay, thank you. Perhaps I could get Peter's thoughts on that.
Sorry for that.
Volume.
I think if you think about the current landscape, I think we've obviously seen a lot of growth. And if you look at all the reports out there, it shows that Indonesia is consistently one of the fastest growers, whether it is in lending or remittances or insurance or investment products. So I think that is a positive. But despite that, obviously there are certain parts of the ecosystem that are still early. The market and landscape is still very much undigitized, with few people that are banked, that have credit cards, etc. I think globally, Indonesia is the second largest cash economy, right? And so that tells you something about what's not great yet, but it also tells you how big the opportunity is. And so from that point of view, we're seeing a lot of startups, within the Sequoia Capital portfolio as well as outside of our portfolio, that are seeing these opportunities and are addressing that. And I'm sure we'll talk more about opportunities that we're seeing. But thanks to an increase in digitization, an increase in regulation, an increase in smartphone penetration, etc., I think the landscape is changing quite rapidly. And look forward to zoom into some of the aspects later on in this conversation.
Thank you. Perhaps Andy, from your perspective. Ooh. You're on mute. Still on mute, I think.
Sorry. A digital economy, we're talking about developing a digital economy, a digital ecosystem, and that is as good as the ability of each member of the ecosystem to transact and to cooperate digitally. So from that perspective, Indonesia has a way to go. Every individual has to be more digitally enabled and more digitally willing. Every small business needs to be digitally enabled. Every big business needs to be digitally enabled and transact digitally. The government has to be digitally enabled, etc. So there's many vectors that will make this happen. And I will agree completely with Peter that I see that as a huge opportunity in all aspects, from all sides of the participants, that every single one of them has to move up that trajectory. And if you add all those trajectories together, it creates a massive, massive opportunity for Indonesia as a whole.
Thank you. And just a follow-up question from me. Do we think there's going to be a lot more consolidation in the market in 2021? I mean, given pressures from the pandemic, and I think Reuters has reported on talks between OVO and Dana, for instance. Are you expecting there to be a lot of activity coming out of the pandemic, hopefully? Perhaps I could ask William on that one.
Yeah, so I think it's yes and no, because I think the consolidations, of course, they need to consider about the potential synergies and the potential efficiencies. So I think I would expect there will be an increase for next year, but it's not merely driven by the pandemic, because I think it's also natural after seeing the market has grown and after seeing the dynamics of the fragmentations and about the market segments, it's just natural that consolidation is happening. But I think it's not merely driven by the pandemic too.
Thank you. Any other comments from the other panelists on that particular issue?
Sure. From my perspective, whether we see it in 2021 or 2022, but in general, we are dealing, as long as we're dealing with the digital economy, we will be dealing with consolidation by segment and by vertical, because the economics of a digital business are such that they operate at scale, and therefore whoever gets scaling up through acquisitions or through just sheer organic growth will create consolidation by default, right? So if I'm just the biggest, the best, because I can grow my company the biggest, the best, I create market share consolidation. And if I keep also buying, then I will concentrate the market even faster. So from that perspective, we have no doubt that if you look at it in very, very long-term perspectives, it will be consolidated. From what we see today is that the innovation is still at an extremely high speed. The opportunity is very large. So therefore, you get through an illusion of current fragmentation, if you will. There's so many startups, there's so many other companies that are jumping in the market, each addressing one piece and one bit of the market. And that creates, in a way, a very active marketplace for the moment. But there's no doubt, at least in my mind, that eventually, almost sector by sector, vector by vector, they will consolidate.
Yeah. No, I tend to agree, and I think it kind of like depends on the type. Like fintech, there's a lot of different businesses and a lot of different business models. And for some business models, it's truly a distribution play, and networks effects are very strong. And when that's the case, then often it is winner take all or winner take most. And in those cases, you see consolidation to drive that. Those that have distribution will be able to, bolt on different products that either they build or they buy, right? So that is one dynamic that you've seen play out, and you've seen some of the larger players, whether that is Grab or whether it's Gojek or whether it's Tokopedia or others, acquire companies, often in the fintech space, to strengthen their capabilities in that area. I think what COVID adds to that is, and we've seen that not just in Indonesian fintech, but more broadly in the region and potentially even globally, is that some companies are accelerated by COVID and some struggle. And when they struggle, the teams might be still great, the product might be still great, but they're struggling on the go-to-market, or they're struggling on fundraising and capital, etc. And they might become interesting targets to be acquired by the players that have navigated the pandemic better, if you like. So different dynamics are at play, but net agree with what the previous panelist said as well around consolidation likely continuing.
Thank you. Just looking forward, I mean, what are the key opportunities and challenges that Indonesia's fintech sector faces, and what does Indonesia need to put in place to sort of win this regional and global competition, or at least be well placed within it? Perhaps William is.
Yeah. So okay, I would start about the fintech opportunity. So basically, we're still seeing like the fintech in Indonesia are still scratching the surface, both in terms of customer reach and product adoptions in terms of behavioral shift. Because we see even like some of the regulations about P2P lending, the POJK was just released like 4 years ago, 2016 and others. So we're pretty much in the second phase of introductions. And I think we are currently in a growing pain mode, because growth is uncomfortable sometimes. And we've had our fair share of issues in customer protections, collection ethics, and others. So we're still working on it as an ecosystem, steering the price ceiling, the price floor, and others. And we think to make it more interesting in the regional and global stage, of course, the coverage of the services, especially like in tier 2, tier 3 cities, because right now most of the coverage are, I would say, it's still in the Jabodetabek area, in Java area. Our challenge is like how we can distribute more in more areas, we cover more areas, because I think to be able to speak in the region and globally, we need to have skill, right? But before that, we need to be able to skill within our countries first. Like, so we need to figure out more on the business model and operating models. So I think that is like the challenge that we need to tackle together, and I think we're seeing good progress so far.
Thank you. Maybe Andy on that one. Still on mute.
I'm sorry, I'm doing this again. There's 2 mute buttons. We've seen all over the world 2 things: very, very smart regulators and very smart governments make room for the industry, and some that are equally smart but try to preempt. They actually slow down the industry. The fintech industry is extremely creative as an industry, and you cannot possibly predict the direction it may take. You can predict a few trends and try to support the industry with those few trends. But if you try to predict too much, then you start procrastinating, you start creating problems for the industry. So what I wish that Indonesia doesn't do, the regulators and the government in Indonesia don't do, is try to predict the future too much and try to play with the industry too much. Let the market happen, let the innovation happen. We see fantastic innovation and fantastic market dynamics, or if you will, if I were to err, whether no regulation at all and just industry, or strong regulation on the other side with the support of the industry, I'd rather err on the no regulation side. It feels like the market enhances and develops very fast, and regulators and governments are good at catching up, but they're not good at leading. So it would be best if industry leads and regulators and governments follow and watch and support what the industry is telling them to support, what the industry is demonstrating that they need support with, including what you guys have mentioned, digital signatures, shared databases of fraud, shared databases of consumers that of credit quality of consumers and businesses, etc. So there will be a lot of opportunities where the government can intervene, can help, can help the industry do things that the industry on its own cannot do, and then stay out of everything that the industry can solve itself. And that would be what I wish every country to do, because we see massive growth and massive acceleration in industries where the regulator has just the right touch.
I echo that. I like how you ended that, the right touch, but defining what that right touch is, I think is often the challenge. And you don't want to be controlling. You do want to be enabling. And sometimes it's hard to strike that balance. And in some industries, in some countries, the lobby from incumbents might be very strong, and it's harder to actually move forward. And some regulations is more to control and maintain status quo than to move forward. Fortunately, we've seen better things in this part of the world, in Indonesia, but also, for example, in India, where we're very active. If you look at what's happened there in fintech, the government has actually enabled a lot of fintech to emerge with what they call UPI, Universal Payment Infrastructure, with the establishment of universal QR codes, which is now happening in Malaysia as well. And actually the interoperability of payment acceptance, whether that is universal QR or UPI, or national merchant ID and things like that. And so if there is an enabling role of the government in those areas, a more robust credit bureau, for example, as well, or quality control on the capital markets, these things are actually building the infrastructure layer on which a lot of private market companies can flourish. And I think, coming back, that right touch is, minimum control only where it's needed to drive the right incentives for the industry and the players and protecting consumers, etc. But beyond that, staying away and just playing at that enabling infrastructure layer.
I'm not sure whether how closely you've been following the job creation law or the omnibus law, as some have called it. I mean, I wonder how much difference that'll make to the investment environment, particularly for tech, William.
Yeah, so I think what we see is like the ease of doing business. So we focus like some things like the ease of doing business will be interesting angle for investments. And I think it's still really like the big picture. We as a stakeholder, we need to, follow on with the tactical practice later on. But we see like, especially in tech are mostly white collar. So I think the impact is not as massive like as the industry in general. But I think in terms of investments, it attracts more investments because we see like the potential ease of doing business is putting into effect. So,
okay, I'm not sure if is that something you've been following, Peter or Andy?
Me.
Sure. Okay. Cool. Well, from Singapore perspective, Peter, I know Singapore seems to have been looking closely at it.
Sorry, Singapore's looking close yet? I missed.
Just the job creation law, this sort of omnibus law that President Jokowi's government has put through, with changing multiple laws at once to try and improve the ease of doing business, which, you know, obviously has been an issue for Indonesia in terms of attracting investment in general, perhaps more manufacturing investment. But I was wondering whether that would translate to tech as well.
I think in general, Singapore is a very different business environment, and obviously has been during COVID as well quite supportive with support for companies. I think generally one of the things I'm seeing more, not as much comparing Indonesia to Singapore, but for example some Southeast Asia markets with what we're seeing in Europe, for example, where I'm originally from, and where you see very strict labor laws, and it's actually really hard to hire people, to fire people. And the cost of doing business are very high, and specifically for startups, if it becomes really hard to hire someone because you know that if it doesn't work out or the business is going down, you're stuck with someone for 6 months or for a year. The risk of hiring becomes harder. People will think much harder before they scale, and so having flexibility in your labor markets is very important. And if those laws that are being announced in Indonesia are supporting of that, then I think that will have a big impact on job creation, and specifically in startups where that flexibility of labor is very much needed.
Thank you.
I'll probably just add one flavor. Sorry, Ed.
No, go ahead, please.
Anyway, no, I'll just add one flavor that labor laws and labor regulation and labor philosophies are very long-term plays. So while you can fix or tweak instances of a certain industry or a certain macroeconomic situation within a year or two, in general, you have to coordinate almost every philosophical, every economic philosophy together. Competition, what Peter was mentioning, the ease of creating the businesses and closing down the businesses, the ease of bankruptcies, etc., plus education, plus government policies with regards to general education, to early stage education, to vocational education, through attracting of foreign direct investments. All that stuff will somehow all get together. So my one concern is that if you try easy fixes, it's not going to work. If you take very long-term points of view and build properly, you will not be remunerated in the next election, but you do get remunerated eventually in decades.
Just looking at stock exchange listings, you know, a way that we've obviously got, you know, a number of unicorns, hackathons. I'm just wondering, you know, what else the IDX can do to make it attractive for tech listings, so that, you know, obviously quite a few have been going abroad, but, you know, are we looking at a time when Indonesia will have a lot more listings? Perhaps that's one for William.
Yeah, so I think it's something that we're very keen and we're following, because we see like there's recent development in the past year, like the development board, the acceleration board, even like the IDX incubator that help companies to prepare themselves and going public. And I think in recent years, there's more and more tech companies are going public in IDX. Even in mid this year, there's a company that went public too, the POS. And I think it's a positive signal going forward, because like I said earlier, we're just entering our second decade. So I think it's crucial for VC funds to get liquidity. And I think the more options that we have for liquidity options, the better. So in the past 10 years, some of the VCs, the exits are primarily M&A, consolidations, or secondary. So I think going public in Indonesia are more feasible this year. And because if not, we need to return monies to LPs, right, to the institutional backer. So I think the more options that we get, so I think everybody's are putting more effort and attentions to the listing part. And I think also the public would see to have more options for investing, right? So because the tech companies, people are more aware compared to 5 years, 10 years ago. So I think for investors, for retail investors too, if there's more options, it will be interesting. And the risk appetite for tech investing is also growing. So I think we're on track because of the recent development of the flexibility on the accelerations and development board. And I think this is something that us as an investor should be encouraging.
Is that one you're looking at from your end, Peter?
Yeah, I think one of the challenges with exchanges is always like if they make it really hard to list, that's not great in some ways, but it also warrants kind of like the quality of the businesses. And what you see in some of the US exchanges, for example, is that the revenue scale that was expected before going public has just gone up over time. And if you have lower revenue and lower scale, you can potentially list, but coverage will be low and liquidity will be low, and it won't be an optimum environment for you as a company. If you look at Australia, on the other hand, they've made it much easier to list. But you see companies at a really small scale list, and that's, what's the right way of saying it? It's sometimes frowned upon if it's too easy, because it's no longer a sign of approval than when you actually list. So trying to strike that balance, I think, is an important one. And I think what you're seeing, at least from a tech point of view, is that many folks that will be eyeing to list at some stage will be potentially considering dual listings, where they have some of the benefits of listing in Indonesia, and often there's a deep sense of patriotism in a way as well that ties into that, and some other benefits. But then also list in the US, where obviously they can unlock more capital and can get more liquidity and coverage and so on. And so focusing on enabling that and having a process to simplify these types of dual listings might be beneficial for the tech ecosystem in the long run.
Thank you. Is that one, Andy, you follow?
I'll just add that if you look at it from the perspective of the public market investor, they get married to two things when they choose an exchange. They get married both to the companies that get listed in the exchange, but they also get married to the currency of the exchange and the rules of the exchange. So they get deeper into Indonesia, if you will, and therefore it's not just the exchange that needs to support the investment, that needs to make sure that there is transparency, that there is rules, that companies that are listed abide by the transparency rules, that there are no surprises that blow up the stock prices. But also the macro situation of Indonesia has to be supportive. That is beyond what the stock exchange can do. The currency has to be stable, etc. So that obviously when investors take those bets, they want to take company bets. They want to take fewer macro bets as possible. So from that perspective, I think there's things that the exchange can do, and they should do very carefully and very methodically to make sure that the transparency, that the liquidity, etc., for as much as they can control, is at the maximum. And then there is the part of the government of Indonesia to make sure that the macro environment around the exchange is also healthy and supportive of the listings.
Thank you. Just going on a slight divergence, but bearing in mind Finance Minister Sri Mulyani Indrawati has warned that the pandemic could set back Indonesian poverty levels by a decade. I mean, we've talked a bit about this, I think, earlier in the in talks today, but what role can fintech and digital services play to allow these services across sort of socioeconomic classes? I mean, especially I'm talking about the poor and the most vulnerable, which is obviously a large grouping in Indonesia.
Maybe one perspective that I could volunteer. What you're seeing in many markets is that it set back economic growth, and obviously there's a risk to that. But what it has also done is it has made people realize how important digital is, and how important it is to automate and rely less on manual activities, manual touch points, paperwork, etc. And specifically in an archipelago like Indonesia, where many folks, it's generally harder to have, like, direct reach, direct connection, logistics, etc. driving that digital growth and digitization of supply chain, of workflows, of administration, etc., I think is very important. And you're seeing that actually being accelerated right now, not just in Indonesia, but elsewhere. And so many companies, and again, not just the largest companies, but also the small warrooms, etc., are embracing technology much more. And I think, not to say that there's no risk, but there's actually an interesting opportunity where you see actually an acceleration of that digitization across all layers of society and of all layers of business as well.
Thank you. Is that one, Andy, at the IFC? Is there a particular?
Well, from my personal perspective, I see finance, if you will, as a necessary evil in a way. That no consumer in the world, no business in the world wants specifically money. They actually want whatever they can buy with the money. They want to finance whatever they want to consume, whatever they want to invest in. So in a way, finance is the necessary evil, and it takes quite a big chunk of the GDP of a country. So if you look, most countries, financial services is between 10 and 20% in some markets that have become financial centers of the world. It's even more than that. So from that perspective, it is a non-productive burden on the economy. What I like about our industry is that through both inclusion and cost cutting, it is likely to become a more useful industry while burdening less the economy. So from that perspective, I actually find it that the evolution that we see in the technology, in the processes, in the operations of the companies that we support, and the underlying service that they provide to the economy at a much lower cost, almost on a constant basis, will create that environment where finance is extremely useful. It helps the economy the way it is supposed to, but at a much lower cost. So therefore, letting the rest of the economy, the food, the health, the education economy, the manufacturing economy, the real economy, if you will, to breathe a little bit more easily.
Thank you. Just touching on e-wallets and how you see the sort of payment sector progressing in Indonesia. I mean, this seems to be one area that's fast changing and being adopted. Particularly all my staff are far ahead of me at adopting different systems and seem to change regularly. So yeah, I wondered how you saw that going forward. Perhaps William on that one.
Yeah, so I think it's very interesting because we see like Pierre mentioned, like we experience setbacks on a macro level, but to some extent we also experience like digital accelerations and talking about e-wallets and e-money. So I think we see the trends are going like embedded finance is going stronger here, where the needs of financial services to make multiple sectors or tech companies that primarily are not financial services is real. We see like the adoption is getting massive. Like the behavior shift are changing. So we see like going forward, like for example in the US, we see like the adoption of PayPal back then. It was powered by the commerce sectors, by the eBay, PayPal, and we see this starting by the all tech companies, the unicorns, the ride-hailing, increase powering the adoptions, and now people are getting used to it. And I think even looking at the market here, it's still in tier 1, so the room to grow in tier 2 and tier 3 cities is still massive, and we're gonna see more of embedded finance role in the societies even further. We see like all companies are adopting digital decisions, and tech is getting more, and I think it's a net positive for the economy and societies in general.
Thank you. Peter, are you following the payments, particularly in Indonesia and e-wallet?
To some extent, and I mentioned earlier, obviously with Indonesia being one of the largest cash societies in the world, there is this massive opportunity. I mentioned earlier some of the things that I think can gradually be improved at the infrastructure layer. But what is interesting is that the impact of companies like Gojek that have built so much distribution and so much frequency of use, as we often call it, right? Like many use cases that they offer. And so embedding payment from the early days with GoPay as one example has just been, kind of interesting to see. And so, that made them actually invest, and the same is true for Tokopedia to some extent, for Grab to some extent, made them invest early on in payments, and just realizing that like go-to-market and customer acquisition cost is often a key driver for these businesses to be successful or not. So when you have distribution already, your customer acquisition cost to have someone for your wallet or payment solution, either online or offline, is just much more favorable. And so the question is how that landscape will play out, what niches are open for specific use cases or smaller players, or whether this is one of the examples that we talked about earlier, where the network effects are so strong and where it's a winner-take-all or winner-take-most type of environment, and where the big players like Grab, Gojek, Tokopedia, and some others will basically dominate that landscape from a digital payment point of view. So it's interesting to see how that plays out.
Is that something from a global perspective you're following, Andy?
Absolutely, and we have the same philosophies as Peter. We do share their views that when it comes to luxury goods, for example, people don't want the same. They don't want to be wearing the same stuff you're wearing. They want to be driving a different car that you're driving. But when it comes to money, they want the same money that everybody else has. So the network economics and the commodity type of service will drive wallets to a massive concentration. So theoretically speaking, you don't need more than one per country. You may want, just for competitive reasons, to make sure that they all stay in their own lane and therefore keep driving and keep innovating. But you really, from a consumer perspective, you don't need more than one. So as long as that is, it's useful everywhere, you can use it in all or most use cases, etc. The consumers will choose one and will probably stick with one, or choose two and stick with two. But whether it is 1, 2, or 3, we're still talking about a massive consolidation of the interface between the consumer and the financial service provider. So I don't know how many banks Indonesia has, but I would imagine it's 60 plus. I can't see how with the kind of distribution network of what you call the new wallets, or what we may call in some instances the neobanks. I just cannot see why a consumer would want to deal with a regional bank, a small regional bank, or a bank with subpar service, etc., while they can have the best digital experience with one of the large national players. So we see that in every country. It's a very, very obvious pattern.
Thank you. I mean, great point Peter makes on the cash. Certainly there is a lot more cash around than in some other countries right now in Indonesia, which I'm sure won't rapidly change, but it could do if this take-up continues at that sort of pace. I mean, in terms of an investor, I mean, is now a good time because, the pandemic creates opportunities, or is it a waiting game now until things stabilize and things are clearer? I mean, what is the sort of investment strategy from your perspective? Maybe from William.
Yeah. So as a venture investor, so we are getting used to invest in risk. Risk is part of the game, right? So it's a matter of how we can adjust the risk. We can identify the risk. So I think it's pretty much still a good time to invest, because we see like a lot of problems that are emerged that need solutions. And I think the interest of global investors too. So I think most of them, the decline of capital injections to Indonesia this time, it's morely a delay rather than a decline in interest. So I think the potential is still massive. So this pandemic just shows like how we need to invest more in digital, in our technology adoptions that can solve real problems. And like I mentioned earlier, like we still basically scratching the surface on Java Island Tier 1 cities. So there's still room to grow in Indonesia. And I think a lot of sectors are showing their resiliency to show that it's not just fad, it's a real problem that is worth to tackle, that's worth to invest, that is worth to be covered by all the innovative new companies. So I think it's a very interesting time to be in. And for us as a venture investor, it's just we need to both us and the companies need to identify the risk even further and prepare our mitigation plan. It's always a game of risk.
And just out of interest, sorry, William, are you noticing, you talked about obviously certain parts of Indonesia, Jakarta, Bandung, Bali, maybe there's a lot more activity going on. Are you seeing signs of more activity in some of the other islands or elsewhere in Java, outside Bandung and Jakarta, perhaps?
Yeah, but we think like the digital and technology adoptions are relatively low other than the cities that we mentioned. So that are the room to grow for companies to expand more, I would say.
But can you have a sort of tech company in Sulawesi and Kalimantan and Papua or other areas?
Yeah,
is there the infrastructure there?
It's the vision. The vision is like for the companies to expand, at least to have the presence that covers them. Because talking about tech companies, we're talking about the companies that has the ability to scale in terms of geography and others. So I think it shouldn't be a problem, and I think it should be within the roadmap of all the companies now to cover Indonesia as a whole, not just like on the metro area.
Thank you. Any other thoughts on the investment climate right now?
Yeah, I think, frankly, for us, we just know that the market is cyclical, and sometimes it pays to be anti-cyclical. And we have realized that some of the best companies have actually been born in tough times. And so during the great financial crisis, Sequoia, I should say, started investing in companies like Dropbox and Stripe and Airbnb that in a 10, 12-year time frame have become very, very large companies. And what we're seeing right now as well is we've actually been incredibly active over the last year. Just early this morning, we announced another 17 companies where Sequoia led investments through its search program, including companies in Indonesia. And out of that have come previous companies in Indonesia, like Bukukas, for example. That is one of these companies that is digitizing the bookkeeping for Warung owners, and there's many, many merchants on the platform. And many of these investments have been done during COVID and have been done fully remote without sometimes meeting the team. But we've just seen an incredible business opportunities. We've seen incredible founders. We've seen when the risk in typical companies is higher, there's actually less opportunity cost. And so more people actually start businesses, right? They might be made redundant, or they might see less opportunity in traditional businesses. So from an investment point of view, it's not just it's not as much for us a higher risk, because again, this thing will pass, as they say. But the time is now to start businesses, and we've seen many folks do that, and have backed a lot of very strong founders. So we're quite excited by the investment landscape, more broadly in Southeast Asia, but in Indonesia specifically also.
Thank you. Andy, any thoughts on the climate in particular?
I'll add some color. I feel like I'm generally a happier seller than a happier buyer in Indonesia for the moment. We see quite a few companies that have shot up in price beyond the point where we are willing buyers. But in general, I think this is where the color and this is where the nuance comes in. In general, if you pick up the right businesses, the businesses that will be around for 15 years, I still say, even though you would be paying some sort of an astronomical price today, there's still so much growth. I'm talking about fintech players that will be around in the next 10, 15 years. There's still so much growth. There's still so much market share that they can gain from the incumbents. There is still so many new customers that are joining in the marketplace, whether that's consumers or businesses. There's so many still new products that can be deployed in the market, so many financial products. So from that perspective, if you are a patient investor like we are, and you invest in the right business models that you think will be around no matter what in the next 20 years, then I think there's no better time. It's now.
I'm just fascinated with your background from Albania. I mean, do you see similar patterns in Indonesia as to sort of as it's happened in Albania, or it's all happening around the same time? Or so you must have started from a very low base there.
That's correct. Well, the beauty of small markets is that they are a little bit more easy to understand. It's like looking at a makeup model versus looking at the entire building in real life form, right? So understanding a small market like my home market is pretty straightforward, and then you can use that pattern recognition for other markets. But obviously, when it comes to industries like this that are industries of scale, you just cannot get the same economies of scale in a market like Albania. So the innovation, while it may happen in small pockets, you will never get the speed that we can expect it to hit Indonesia. The same way it has happened in China, it has happened in India, it has happened in the United States. It has happened in the joint Europe rather than the separate Europe, if you will. So the moment Europe unified its regulatory regime in financial services, then you get this super giant players that can accelerate their growth across countries. So again, it's interesting, and we don't know. It is a very good debate to start. Where do small countries fit, and how do they innovate in such a rapidly accelerating financial services world? And what is the role of big countries and the small countries when all the dust settles? We have this theory, or at least I have the theory, that regulatory barriers will have to come down. Otherwise, some markets will stay far behind the markets that advance.
Thank you. Just a reminder that you can put any questions into the questions and answer. I think we have one question asking about the role of the regulator, OJK, and financial inclusion and education, if I've correctly translated that, and how companies can work with the regulator, I suppose. William, are you working closely with OJK?
Yeah, as associations, representing associations, we are closely hold talks and other discussions with the regulators, especially talking about customer protections and others. So I think the role for us is like gathering like the feedback of multiple stakeholders and participants on how we can govern this further. And I think a lot of talks has been happening happening right now, and we think like of course we would like to catch the aspiration of the players and of the regulators in terms of milestones that we need to achieve, and I think all of the stuff that that is being asked is happening right now. It's ongoing.
Okay. And just a thought on, obviously with the pandemic, there's been pressure on maybe on online lenders in terms of NPLs, and how, I mean, you know, how do you assess credit and make sure that you're getting the right people, getting the right money, and, you know, putting together your investors with people that, you know, can pay back eventually, or, you know, how is that working, do you think, in Indonesia? I mean, particularly now that we're being stress tested by the pandemic, I suppose. And even on a global scale, I suppose, how is this sort of, you know, the risks of lending compared to the, you know, needing to get obviously money out to people? I know bank lending in Indonesia, for instance, is, I think BI has often been calling for it to, you know, faster pace of bank lending. So, I mean, how can fintech fit into that area?
Maybe one perspective. Again, if you think about lending and you think about customer acquisition, you see that a lot of activities happen around the larger ecosystems, around whether it's Tokopedia or Gojek or Grab, as I mentioned earlier, or some of the lending platforms. When this is increasingly digital, it also means that there's an increasing amount of data available. And so you see more and more companies move away from the offline manual approach to lending to a more digital approach to lending, which has its risks, obviously. But it also has its benefits in terms of being able to tie into transaction data or other data. If you look at, like Sequoia, for example, invested in a company called Trusting Social that can leverage telco data to do credit scoring through purely opt-in from the borrower approach. And the quality of the data and the signals and the ability to forecast credit worthiness and credit scores, etc., is exceptionally high, actually. And in similar cases, Tokopedia or Gojek would leverage transaction history on their respective platforms to be able to assess some level of credit risk. And none of these models are flawless, but you actually see an increase in an ability to forecast credit worthiness. And you sometimes actually see very healthy NPLs, non-performing loan kind of like ratios within some of these businesses. So it's an interesting space, and during COVID, like obviously risk levels go up, but in general you see companies getting smarter and smarter in terms of how they assess risk. Much more to be done, but interesting developments from what we can see.
In fact, we've got a follow-up question from the floor from Johan Salim. There are already 200 P2P platforms registered in Indonesia. Do you see any oversaturation on the P2P lending sector, or is there still room for further growth in this sector? Is that one for you, William?
Yeah, so I think, yeah, we have hundreds of registered, but I think the fully licensed is just around 30. And from those numbers, there is no official figure on breakdown between productive and consumptive. But I think from FP, the associations, like the estimate is around 70% of them are in Indonesia right now are consumptive lending, while 30% is for productive. So definitely we see room to grow in terms of productive lending, especially during this time. The trend in Q2, Q3, I think a lot of productive lending is increasing. Like a lot of the P2P players, they are targeting a more, they are readjusting their risk appetite and focus more on the productive lending. And we see it is speed bump, but we still have a huge potential. And if we observe from the players there, I think it's a continuation of my point earlier, like most of them still covers this Java Island. So I think the room to grow beyond that, the lot of underbanked and unbanked populations beyond that is still massive. So I think from 200, maybe we focus on the 30 and how we see a lot of consolidation is going on, because I think from those 200 players, most of them are still testing their operating model and their business model. So I think this is we are still in the growing pain process. So definitely it will be a natural selections from those 200, and I think it will be trimmed down into a healthier number of companies.
Any other thoughts on P2P platforms?
Sure. And I see that as activity increasing, but definitely the number should be decreasing. So the closest business model to P2P lending is what we mentioned earlier, the stock exchange. It doesn't make sense to have 300 stock exchanges in the market. It's a very simple function of basically a meeting point between buyers and sellers. It's a clearinghouse. So if the clearinghouse is extremely efficient and it can produce or originate very good loans, then you don't need thousands of them. The investors should, because you're breaking up not only the operational efficiencies into too many pools, but you're also breaking up the liquidity in too many pools. So it does not make economic sense to have too many, but it does make economic sense to have a lot more activity where investors come into place and buy directly the credit of others.
Yeah, and let me quickly add to that. I think it's really interesting what you just mentioned there. You're adding up operations, but also liquidity pools. The other thing that you're breaking up, I think, is data and the quality of the models that that forecast, credit score, etc., are dependent on the training of those forecasting models, which is dependent on the amount of data. So that's why you see in markets like China or even the US, at some stage these platforms either consolidate or just many companies fall away, and a few bigger companies remain that have the scale and that have the data to fine-tune their models and get better and better in assessing risk. And that's a very important factor here as well, I think.
And just putting Indonesia in perspective of Southeast Asia and globally, I mean, obviously Indonesia has this very big population and a young population. I mean, when you're dealing with investors, I mean, I've spoken to some Chinese investors who say they saw Indonesia as China at an earlier stage, which I think that was sort of more in the e-commerce area. But I just wondered how you see Indonesia progressing. Is it going to be sort of, you're going to have investors, global investors, you're going to have, a sort of Chinese model of certain things. Obviously in e-commerce, there seems to be a lot of Chinese investment, perhaps compared, and you haven't had the Amazons of this world directly invest in e-commerce, for instance. I know we're talking fintech, but I just wondered how you see Indonesia's position in Southeast Asia and globally now. Maybe one for Andy.
Sure, I can volunteer that. So at a very fundamental level, we don't see much differences between markets. Markets are unifying in many ways. So the consumers are behaving the same. The companies are offering similar products at similar speeds with similar innovation patterns, etc. And investors obviously are crossing borders looking for opportunities left and right. So there's really no market that is left behind, really. So from that perspective, it is possible that China and Indonesia will follow similar paths. Where I see the difference between China and Indonesia is the forcefulness of the government in guiding the industry or guiding the sector. China is a little bit more thoughtful, a little bit more rigorous in how they pursue and how they guide the opportunities or how they guide the markets. Which obviously carries the risk that if they actually get it wrong, they screw up the entire market. Indonesia is a little bit more laid back, or where the regulator is a little bit more behind the scene, which is usually my favorite model, which means the government or the regulator will never be a factor in accelerating the industry, but will stay in the background to make sure that the industry does not create problems, if you will, for itself. So from that perspective, the only thing that I see a difference between China and Indonesia is exactly that. And of course, you can talk about education, you can talk about the readiness of the consumer and the readiness of the business. But other than that, I think it's just a matter of time. All markets are headed in the same or similar direction, and they all will be there in the next 30 years or so.
Thank you.
I think, if I may add, I think it's interesting to see how Indonesia has become an attractive market at the global stage. I think when Tokopedia raised a $100 million round in around mid-2014, it was for the first time, I think, that the rest of Southeast Asia and perhaps Asia saw Indonesia shine, and it's marked by many as an inflection point. But that was at the Asia scale. Then what happened in 2016, when at least the investment and venture markets were down a bit, exactly at that time when raising capital for many startups was quite tough, Gojek raised 550 million for a domestic play, not for a global or regional, but for a domestic company at that stage. And I think that is when many people globally took note, because that round included global names in the private equity industry like Capital Group and Warburg Pincus, DST, who had invested even before that, I believe, Sequoia, and we initially led the Series A in the beginning of 2015. And I think since then, globally, investors have been looking at Indonesia, and whether that's U.S. investors, earlier last month, Tokopedia announced an investment from Google, obviously from the US, as well as Temasek from Singapore. So I think whether it's Chinese or US or other Asian investors, I think Indonesia, has become a force to be reckoned with and a market that is attracting capital. And I think it's just continuing to be like that if you look at just the scale that many of these companies are reaching. So I think it's very exciting.
Any thoughts on that, William?
Yeah. I remember the time that Peter mentioned, like 2014. It was like really when Indonesia was put on the map globally. Because I've been a VC since 2011. Back then, before then, 2011, 2014, nobody knows what I'm doing back then. It was not too popular as now. VC wasn't even a job back then, right? So I think we've drawn a lot of comparisons to China, maybe because of the demographic, but I think on the market behavior, it's really on its own, and I think it's in its unique way and in a positive way. Because if you see like e-commerce player, if it's the leading e-commerce player in Indonesia only, and e-commerce player that won the rest of Southeast Asia, if you see the comparison, the valuation is like, even they're just operating in Indonesia only, they're much more valuable rather than the company who won the rest Southeast Asia. So I think the market is big enough to be the home of multiple unicorns, and I think it's upward trends for now, and it's still relatively young. We just went through one cycle, just one decade. So I think the overall trajectory is really positive. And I think we will show more or our own color, I think, in this first half of this decade.
Thank you. Okay, well, we'll probably shortly wrap up, but let me know if there are any final thoughts you have as investors, maybe looking towards 2021. Are you excited? I mean, you mentioned, Peter, you were still excited with Indonesia, or is it cautious optimism?
I think as investors, we always have to be cautious, and it's always drinking the Kool-Aid and being excited whilst being fully aware. And within Sequoia, we have this big mindset of what we call get real. And on future investments or things we're evaluating, as well as portfolio companies, the focus is to be very honest and intellectually honest about what's working and what's not, and balancing the excitement and passion for a certain company or founder with the reality of how hard it is to build business and how much risks there are, and how many flaws early stage startups invariably have. But yeah, it is very exciting. I think if you look at again, the number of war rooms and how that is being digitized, and the role of fintech in that, it's massive. If you look at Indonesia as the largest Muslim population, Sharia has been talked about a lot, but hasn't really taken off. But I think there will be more opportunities in that space. I think many areas are still to be developed, and specifically in wealth management as well. I think one of the things you often see when you think about the evolution of fintech, it starts with payments, it then goes on to lending, and then goes on to insurance. And so, with Sequoia, we initially backed Midtrans in the payment space. In the lending space, we are behind Modalku in peer-to-peer SME lending. Sequoia invested in Koala and InsurTech. I think what is next will be things like wealth management and investments. And that has grown a lot already, like I think 10x in the last 5 years when it comes to mutual fund investors, etc. And even when it comes to stock investors, they've grown like 3x in the same period. And many of them are millennials, and that's driving a lot of adoption for digital fintech products. So lots of opportunity lies ahead, I believe.
Thank you. Any final thoughts, Andy?
No, equally excited. It is a market where, again, as I said, if you are patient enough and you choose the right companies, you will do well, even though they are pricey right now, and we don't like it as buyers. But we don't complain much, because as everybody in my panel says, the opportunity is very large. The market is still very virgin. The growth is multi-vector, so there's a lot of forces that are growing our industry. So we are buyers in general. In the end, we are buyers.
Yeah.
Great. And lastly, William.
Yeah, so we had talks in the associations at Amfesindo and consensus. All the other investors we see like this year is a speed bump, but the potential remains huge, and we see from multiple investor standpoint like respond this positively, especially like looking at more companies, especially in the tech startups that are eyeing local listings as the options, and how the local listings is also a response to that positively, and see the role of the financial services in terms of tech and multiple sectors beyond that is also exciting. The trend of embedded finance, even like the global investors, Andreessen Horowitz mentioned in one of the podcasts, like every companies will become some sort of fintech in a way. So we see like the growth of financial services, the embedded finance to the overall tech ecosystem is positive. So a lot of innovation on how we work on venture investing, startup product development, and others in 2021 will be very interesting.
Thank you. So just summing up, I mean, general optimism there, and I mean, obviously from the regulatory perspective, it sounds like the right touch is it that makes sure things are fixed when they need to be, but not necessarily trying to think too far ahead in such a changing environment. So on that note, I'd just like to thank the panelists and for an interesting discussion, and I look forward to more in the future. Thank you very much.
Thank you, Edward.
Thank you so much.
Thank you so much. Thank you.
Panelists.
Thank you.